students, welcome to Sunil's tutorial. I'm Sunil Milwani and today we'll be doing this chapter called as Cost Reconciliation Statement. We're going to do illustration 4. Let's see the working note first. Particulars, P&L, debit, credit, cost sheet. Let's start. Let's say that from the following particulars, prepare a reconciliation statement and ascertain the costing profit and loss. Net profit as per financial is 50,000. We'll see that later. Opening stock overvalued by 2,000 in cost. So opening stock. Whenever they say overvalued, you write it in the same book. When they say undervalued, you write it in the other book. It has been overvalued in cost, therefore you will write this in costing only, 2,000. Right? Next, administrative overheads charged in financial accounts was 20,000, but recovered in cost is 40,000. So admin overheads. Admin overheads charged in financial accounts is 20,000. It's an expense, therefore it is on the debit side. But charged in financial accounts is 20,000, but recovered in cost is 40,000. You have recorded 40,000 in cost sheet, right? Next, income tax provision. Income tax, we know comes in P&L account on the debit side, 1,200. Next, notional salary of the proprietor and cost. Notional salary. They have specifically said that it has been recorded in the cost book, therefore you record it in the costing account, 20,000. Next, interest received. Interest received. When you receive interest, P&L on the credit side. It's a P&L credit side entry, 12,000. Next, closing stock. They give you that closing stock as per financial books are 16,200. Closing stock comes in P&L account on the credit side, whereas as per cost books is 19,000. Right? Right. Now once you've done this, let's make cost reconciliation statement. As on, the date is given to you as, okay, they haven't given me the date, particulars, rupees, costing profit, add less financial profit. So that's going to be your format. Let's start. Now they've given you that net profit as per financial records is 50,000. Net profit as per financial records is given to you as 50,000. Okay, let's move on. Now, what you have to do is look at your working note. Keep your finger on cost sheet. The rule is more is more, less is less. Look at this. If I keep my finger on the cost sheet, this figure is 2,000, whereas the figure in P&L is nil. This figure is more. More is more. So you record this in add column. Opening stock. Opening stock. 2,000. Right? Let's keep your finger on the cost sheet. Cost sheet, this figure is 40,000, this figure is 20,000. This figure is more. More is more. How much is it more by? 20,000. So you will write the extent to which it is more. Admin overheads, 20,000. Right? Income tax is less in cost sheet. Less is less. So income tax will come here. Income tax. Since it is less, it will come in the less column. notional salary is more. More is more. Notional salary 20,000. Right? Interest received. Now for credit side entries, the rule reverses. This is less. This figure is less. For credit side entry, this is the credit side entry, the rule reverses. Less, you will write it in more column. For interest received. Interest received is 12,000. Right? Closing stock. Again is a credit side entry. It's more. More, since it's a credit side entry, the rule reverses. More is less. So you will write closing stock here. 16,200. 2,800. Right? Now 1,200 plus 2,800 is going to give you 4,000. Right? 40, 52, 54,000. Right? Now guys, you are going reverse. You are going from bottom to top. That means all the sides will become opposite. 50,000, this was less. Since I am going the other way around, I have to add. So 50 plus 4, 54,000. Right? Because 54,000 minus 4,000 will give you 50,000. Since this is add, you will get here. So 54 minus 54, so my costing profit was there. And do we get this in here? Next, let's move on to the next sum, guys. Let's see question number 5. Illustration 5. From the following, prepare reconciliation statement in the books of XYZ. Let's make working note first, guys. Working note. Particulars. P&L. Debit, credit, cost sheet. Let's start. From the following, prepare reconciliation statement. Net profit as per financial accounts, we will see that when we do the fair work. Income tax provision made. Income tax provision. Income tax we know comes in P&L account on the debit side. So this is going to be 30,000 over here. Then you have material purchase 5,000 units were recorded in cost at standard cost of 24. So this is going to be material purchase.
1,20,000.
Right? How much is that?
1,20,000.
1,20,000. Guys, how did we get 1,20,000? He multiplied 5,000 by 24. That's how we got 1,20,000. Whereas in finance it was recorded at actual cost of 22. So 5,000 into 22. 1,10,000. Next, let's see the next entry. Old bad debts recovered. Bad debts recovered. Now bad debts recovered is the income. So this comes in P&L account on the credit side. 20,500. Right? Next. Loss on sale of furniture. Loss on furniture. Expenses, debit expenses and losses, 4120. Right? So that finishes your working note. Let's start with a favor. Cost reconciliation statement as on cost reconciliation statement as on 30th June 2004. Particulars, rupees, costing profit, add, next, less financial profit. Right? Let's start. Now they're giving you that net profit as per finance is 40,340. 40,340. 40,340. Right? Okay. Now, yeah, that's the financial profit that's given to you. Now, all you need to do is look at your working note. Now let's see this. This is less. Okay. Income tax provision is less. Less is going to be less. So that means this is going to go up there. Income tax provision. Income tax provision. Income tax provision is going to be 30,000. Right? Next, material purchase. Material purchase is again less. 1,20,000, 1,10,000. Less is less. So you will record this in less column again. Material purchase. Material purchased. Material purchase 10,000. Right? Next, this is less, but this is a credit side entry. For credit side entry, less is more. So this is going to go into more column, and this is going to be bad debts recovered. Bad debts recovered. Amount is 20,500. Right? And loss on sale of furniture. Again, this is less. Less is less. So that means this will go in less column. So this will go in loss on furniture. Amount is 2120. Now if I add this is 44,120. Right? Now let's see this. Since I'm moving the other way from answer towards the question, so I have to add this. So this is 40,340 plus 44,120. Someone give me that amount please. 84. 84,160. 460. So 84,460. Right? And this is 20,500. Subtract this please. 63,960. So your costing profit is 63,960 plus 20,500 gives you 84,460 minus 44,120 gives you 40,340. Right? Let's move on to the next one, guys. Let's see illustration 6. Working note. Particulars, P&L, debit, credit, cost sheet, right, let's start. They've given you that from the following information you are required to prepare a statement reconciling the results of the cost book. Net profit as per finance, we'll see that later. Work overheads under recovered in cost book. Work overheads. They are saying that they have been under recovered in cost book. Since under recovered, you recorded in different book. If they have been under recovered in cost, that means you recorded in finance. Amount is 1,001. Okay. If they say over recovered, you record it in the same book. If they say under recovered, you record it in different book. Next, depreciation. Depreciation. Depreciation as per finance is 13,000. Depreciation as per finance is 13,000 and as per cost is 14,326. Next, obsolescence loss in finance only. Obsolescence loss in finance only. In finance only amount is 2,021. Next, income tax provided in finance only. Income tax is 2626. Right? Next, interest received. Interest received. Amount is 3031 now. Interest received but not recorded in cost. Received, that means it's a credit side entry. 3031. Next, bank interest debited in finance. Interest paid. You paid an interest of 292. Right? Let's see the framework for this. This is your cost reconciliation statement. As on, they haven't given you the date, particulars, rupees. Okay, let's see this, costing profit. Add less financial profit. Right, let's start. Now the sum says that the net profit as per finance books, are given to you as, the net profit as per finance book is given to you as 51,052, right? So financial profit is given to you as 51,052. Okay. Now let's look at the working note. Work overheads is less in cost sheet. Less is less. So this is going to go in less column. Work overheads. Amount is 1001. Depreciation is more in cost sheet. More is more. So depreciation will go in the more column. 1326. Obsolescence loss is less in cost sheet, so it will come in less column. 2021. Income tax is less in cost sheet, so it will come in less column. 2626. Interest received is less in cost sheet, but it's a credit side entry, therefore it will be more. Interest received 3031. Next, interest paid is less in cost sheet. Interest paid 292. This is someone please add this. This is 5940. Right, someone please subtract this. No, this is that 51052 plus 5940.
56992.
56992. Now subtract minus 4357. 52635. Right. Next, let's move on to the next one, guys. Right, let's take the second sum. The net profit of the company amounted to 60,412 for the year ending 31st December 2003 as per financial records. The cost records revealed a different figure. A scrutiny of the two sets of accounts disclosed the following facts. Work overheads recovered in cost account during the period. Work overheads recovered in cost account was 28,450, whereas the actual expenses were 21,390. Next, the actual office expenses office expenses. The actual office expenses were 19,850. Whereas the office overheads recovered in cost accounts were 14,500. The annual rent value of the premises owned by the company was 10,800, was charged in cost account only. Rent charged in cost account only is 10,800. Next, selling and distribution expenses for the period amounted to 16,490, which were excluded from cost. So selling expenses were excluded from cost. So that means they are going to be there in P&L only, 16,490. Excess depreciation charge in cost. Excess depreciation. It is excess in which account? Cost account. So you will record this in cost, 2,400. Excess depreciation charge in cost. Next, expenses not included in cost but shown only in financial account. Interest on loan. Interest on loan is given to you as 1,600. Next, bank charges. Bank charges are given to you as 160. Then you have directors' fees. Directors' fees. Directors' fees is given to you as 750. Then you have penalty due to late completion of project. Penalty due to late completion is 2,500. Right? Let's move on ahead. The gains during the year not included in cost. The gains during the year not included in cost are transfer fees. Transfer fees is a credit side entry since it's a gain. So this will be 45 on the credit side. Then you have profit on sale of investment. Profit on sale of investment. Amount is 4250. Next, you have interest on investment. Again, it's an income for you. Investment. Income, therefore P&L account on the credit side. Amount is 9450. Right? The following appropriations have been made before arriving at the profit of 6412. Let's see. Transfer to dividend equalization fund. Dividend equalization fund. Expense, debit expenses and losses, 10,500. Next, transfer to income tax reserve. Income tax reserve. You have transferred 6,400 to income tax reserve. Next, transfer to debenture redemption fund. Debenture redemption fund. You are transferring 9,000 to debenture redemption fund, debit expenses and losses. Next, a sum of 10,000 was given as donation to Prime Minister Relief Fund has been charged to profit and loss account. Donation. You've given a donation of 10,000, debit expenses and losses. Right? Let's make the paperwork for this, guys. Cost reconciliation statement.
31st December. 31st December.
As on 31st December. Particulars. Rupees. Costing profit. And less. Right in the beginning of the sum, they said that the net profit of the company is 60,412 as per financial records. So as per financial records, it is 60,412. Okay, let's start. Now let's start looking at the working note, guys. Work overheads is 28,450 and this is 21,390. It is more in cost. More is more, less is less. Since it is more, you will record this in more column. Find out the difference. How much is the difference, guys?
7060.
7060. Right? Similarly, office expenses is 14,500. Office expenses is 14,500 in cost and 19,850 in P&L. So it is less. Less is going to be less. Someone find out the difference?
5350.
Office expense. How much is it you are saying?
5350.
5350. Next, rent is more in cost. There is no figure here. More is more. So this is going to be here. Rent 10,800. Right? Next, selling expenses is less because here it is nil and here it is 16,490. Less is less. So selling expenses is going to be less. Selling expenses is 16,490. Next, interest on loan. It is not there. I am missing entry. Excess depreciation. Depreciation is more. So depreciation 2,400. More is more. Right? Next, interest on loan. Now all these figures, interest on loan, bank charges, directors fees and penalty is nil in cost sheet. So all of them are less, so all of them will go in less column. So I will directly write all of them now. So this is going to be interest on loan. Interest on loan is 1600. Then you have bank charges 160. Then you have director's fees 750. Then you have penalty 2,500. Okay. Next, let's see this. Transfer fees, sale on investment, interest on investment. All of them are less in cost sheet. But these are credit side entries. For credit side entries, the rule reverses. This is less here, so this is going to go in more column. So you will have transfer fees 45, sale of investment, profit on sale of investment is 4250 and interest on investment is 9450. Okay. Now, dividend equalization fund, IT reserve, debenture redemption fund and donation. All these four figures are less. Since they are less in cost account, therefore they will be recorded in the less column. So I will record all four of them here. So this is going to be dividend equalization fund. Dividend equalization fund is 10,500. Then you have income tax reserves. Income tax reserves are 6,400. Then you have debenture redemption fund, which is 9,000. And then you have donations, which are 10,000. Right? Okay, someone will have to help me add this, right? Someone please add all that. 62,750. Right? Since I'm going the reverse way, this will become add. So 60,412 plus 62,750 is
123,162.
right? Someone add these figures, please. Thirty-four.
34,005.
So 34,005. Someone please subtract that.
89,157.
89,157. Right? Next, let's move on to the next sum. Now, those were all type 1 sums where they're giving you the entries. Now let's move on to type 2 sums. Right? Let's see question number 8. Whether it is type 1, type 2, the method remains the same, only the data is given to you in different manner. Okay? Let's see this. Let's make working note first. Working note. Particulars. P&L. Debit. Credit. Costing. Now, what is so different in the sum? They have made the P&L account and given it to you, right? So, let's see this. Let's see sum number 8. The P&L account is made and given to you. A company's trading and profit and loss account is as follows. The profit as per cost records was so much. Prepare a reconciliation statement to reconcile the costing profit with the financial profit. Further information as per cost accounts is so much. Now first let's read the further information and reconcile that. Cost sheet, in the cost sheet the closing stock is taken as 6420. So closing stock in cost sheet is 6420. Now guys, please look at your P&L account. Below purchase you have less closing stock. So in finance the closing stock is 6120. In finance, the closing stock is 6120. Next, work expenses are taken as 100% of direct wages. So in costing, work expenses are taken as 100% of direct wages. Please look at direct wages in your P&L account. Direct wages in P&L account are 15,750. 100% of 15,750 will be 15,750. Now, in finance, work expenses are taken as 18,195. 18,195. Right, guys? Can we see that in P&L? Work expenses are given to you as 18,195. Sorry. Selling and administrative overheads are charged at 10% of the sales and 10 paisa per unit. Right? First, let us see selling expenses. Now, selling expenses as per cost sheet is 10% of sales. If you look at your sales in the P&L account, it is 1,12,500. So it will be 11,250. Right? And selling expenses as per cost sheet are 10,650. Right? After selling expenses, the next is admin expenses. Admin expenses. Admin expenses are 10 paisa per unit sold. Now they are saying that 7,500 units have been sold. If you look at your P&L account on the credit side, sales 75,000 units. 75,000 units, 10 paisa per unit is going to be 7,500. So in cost sheet, my administrative overheads is 7,500, whereas in finance it is 8,010. Right? Depreciation. Depreciation. Now depreciation as per cost sheet is 1,200. Right? As per finance, depreciation is 1,650. Right? Do we get this much clear? Now let's look at those entries which are never recorded in the cost sheet and come only in P&L. Let's scan through the P&L, guys. First entry, purchase, we have that in cost sheet. Closing stock, we've recorded. Wages, work expenses, selling expenses, admin expenses, depreciation, we've recorded all of that. Let's scan through the credit side. Sales, profit on sale of machinery, right? Now profit on sale of machinery is never recorded in cost sheet, it is recorded only in P&L. If you all remember your cost sheet format, we never had profit on sale of machinery there. So you will have profit on sale of machinery. Profit on sale of machinery is 3,900. Right? Now once this is done, then you can make your cost sheet, cost reconciliation statement. Reconciliation statement as on the date is not given to you. Particulars, rupees. Costing profit, add less any financial profit. Let's read the sum, guys. Now, they've given you, if you look at your P&L account, guys, please see your P&L account. Net profit as per P&L account is given to you as 30,450. Net profit as per P&L account is given to you as 30,450. Right, people? Now, let's look at your working note and complete the sum. Closing stock, guys, is 6420 here, 6120 here. It is more in cost sheet, but it's a credit side entry. More is less. So therefore this will go here, closing stock. Someone just give me the difference, please. 300. Right? Next, let's look at work expenses, guys. Work expenses are 15,750. It is 15,750 and 18,195. It is less in cost sheet. Less is less. Right? Someone give me how much is this? Work expenses.
2445.
Work expenses is 2445. Right? Next, selling expenses is 11,250 and 10,650. It is more in cost sheet. More is more. Right? Someone give me the difference. How much is it? More. Selling expenses 600. Right? Next, admin expenses is 7,500 here, 8010 here. It is less in cost sheet. Less is less. So you put this in less column. So this is going to be admin expenses.
510.
Admin expenses. How much?
510.
Right? Next, depreciation is 1200 here, 1650 here. It is less. Less is less. So in that case, this is going to be depreciation here. How much is it less by? 450?
Yes.
Right? Next, profit on sale of machinery. Guys, this profit on sale of machinery should be a credit side entry. It's a profit. 3,900. Right? Profit on sale of machinery should be a credit side entry. It is less in cost sheet. But since it is a credit side entry, therefore it will go in more column. So this will come here as profit on sale of machinery. Profit on sale of machinery. 3,900. When you add this will be 4,500. Right? Someone please add that.
3705.
3705. Someone please add 30,450 plus 3705.
34155.
34155 minus 4,500. 29655. Right? So my costing profit is going to be 29,655. Right? Okay. We'll stop this here for the day. Thank you very much.